Jerry Gidel is back to our program to weigh in on the latest USDA report that is very in line with what the market expected, with no huge surprise, and yet all the market consideration that he's going to bring us on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. If you're new here, please make sure you subscribe. So Jerry, how are you today? We have seen a report that's not very detached from what the market expected, but still the stocks went higher.
Well, it was I don't know, somewhat of a typical, in my opinion, December crop report here on supply demand. This is all kind of based upon the fact that there's no USDA production report this morning. We tend to end up kind of hanging back and waiting to see what the final number might be. Plus, also adding to the reasons why the USDA is somewhat stagnant on corn and soybeans, particularly, is the fact that they're isn't a stocks report that comes out. The December 1st stocks report comes with the January final production report. So that being the case, I wasn't expecting much. There was a minor expectations from the trade on corn and soybeans. Everybody was kind of cautious, though, about the wheat side of things. We had a pretty good break going into this USDA report this time around. And, wow, we went down 15 million on, we went up 15 million on the stocks and went down 20 million on exports. I'm not sure that was worthy of the kind of break we had, but the technicals got going on this thing and bashed it down to some of the recent lows in that on both these and March Chicago wheat. But here we are on Friday, Van, we bounced back on this thing because there really wasn't a lot of follow through on things. I think some people started to look at the reality of the fact that these were somewhat modest changes, if you will, in the world stocks reports and also the U.S. Indian carryover stock. Now, that's but right now, when we do have somewhat limited participation this time of year, we sometimes do end up getting some choppy markets.
Yes, and weren't you surprised by the rally for soybeans on Friday?
Um, to some extent, yeah, it's a little out of character. We hung in there on soybeans and corn late in the session after the report. They kind of got beat up early in the session on the weakness in the wheat and things like that. They kept crawling back. There really wasn't with no changes in exports. I think that's the one thing that's kind of interesting here. Everybody seems to be quite concerned about exports being whacked away. USDA's adjustments they made last month really were not too far off of that on a pace situation comparable to the 5-year average. Now I know that the Chinese have played pretty coy here about buying a lot of beans up to and earlier this year. But if you start thinking about what's happened here on both on export sales on a daily basis and some unknown destinations, they've been buying some stuff. I'm not saying though that the one thing that's keeps looming over this soybean market is the South American good start they've had and the weather conditions there in Brazil have been pretty solid in the major producing areas. Boy, it's not as good in Rio Grande and Paraná, but that seems to be taking a back seat right now.
Yes, that was exactly what I was going to ask you. Do you think that by some point the market is going to feel or react to the drought in the southern Brazil state?
I think it's going to. I think there's been a situation here because one thing too is everybody thinks, oh wow, that the Mato Grosso crop is going to be the one that's going to be available right away here after the first of the year into the export channels. Yes, in some cases, in some of the areas of Mato Grosso, but it's got to take a long travel all the way to the beginning of the Amazon there before it's really in an ability to actually move it. The other side of the coin is that Rio Grande and Paraná are really very close to some export facilities, and things aren't looking that good. I think you've kind of saw some of the same things I've seen here recently on some of these videos out of both those states. They're looking kind of tough on things. I can't. Beans are always a tough. They're not as easy to count out. Corn, boy, there's some of those corn shots we've seen floating around the internet have been a little on the toasty hour there. From there, I've actually even heard some people talking about they might tear up their corn and plant beans. Well, that's an interesting twist at this point. So yeah, that now I know that the total crop in both those states, or at least Rio Grande is now it's down there at fourth largest in this overall in the U.S. in Brazil. Paraná's number 2. I think I don't know if we got Minas Geradas or maybe Goiás is number 3, but even then, it's a situation where the domestic producers down there really depend on that crop down there to help feed their livestock. And it's not looking that good from what we can see. Now, that doesn't mean that we don't always see some of the most good or bad situations on videos coming out of any country, even the U.S.
Yes, and do you think jumping into the energy side of things, we have listened to some noise on the crude oil sector, but well, it's kind of stable around $70. But do you think that could change with resounding on ethanol and the other?
Well, the ethanol spreads right now versus the energy are quite impressive. That margin situation, we just, well, we haven't had an update on the actual output yet for November, but it sure looks like it was pretty stout. From there, we have had some pretty good corn usage factors coming in, particularly in October here on corn. And that the interesting twist, I understand people we've had quite a correction. We went from let's just say 80 close to mid 80s and that all the way down below $70 on crude, and there's probably going to be a little stability and maybe a recovery. I don't know that at this point that the ethanol side of things is going to get a boost from the crude oil. It seems to have its own independent reasons about what they price on ethanol. It's not always connected to the energy price from there. But the one thing that we don't want to forget, at least on the U.S. side, we are entering a reduced driving period right now from December pretty well into early March. It's the northern half of the U.S., or at least from the Rockies to the Atlantic at that point, is things are slowing down on the demand situation. And I hate to say this, but the kind of the recovery we just have had here in our COVID incidents, not so much from the Omicron, but from Delta, and that impacting things. I think there's also some people maybe reducing their driving back to the office, things of that nature, maybe going to stores. I realize that, we've got a couple of more weeks till Christmas and there'll still be people out there making some purchases. But I wonder, whether this year is going to be quite interesting. There's kind of an attitude that the cold and wet's going to be kind of in the east of the Great Lakes on through the Northeast, while the southern areas of the U.S. might be pretty nice on temperatures. Actually, we're going to get some 60s coming up this coming week here in Chicago, kind of building back after we had quite a nasty set of storms that moved through the Midwest over the weekend here.
And what are you expecting for next week?
Well, I kind of feel like this thing is still kind of trying to see if they can get its supplies under control. I guess the one thing that I'm real cautious is as we approach these kind of magical levels here at $13 on January beans. And the twist of it is right now the March corn has been above this 590 level a couple three times, and that's an interesting one right now. Technically, that's an area on some of these long-term charts out there that gets people kind of fired up. But I wonder if we're going to have a lot of spin on it. I guess one of the twists on it right now, two things that could make a difference as to how this market responds over the next week or so, because I really do think the last 2 weeks of the month is going to be very quiet at this point. But the tensions in the Black Sea, despite the Putin and Biden having a conversation there for a couple hours on Zoom, I can't say that that particular short-term situation is really all that calmed down. If something happened there, that could set things off in an interesting way, put the wheat market in the U.S. back into play. And on the weather side of things, there is, South America at this point, actions in Argentina. They had some showers last week, but I think they definitely need a lot more. And and definitely we've already discussed Rio Grande and Paraná. If things don't improve there, that could give us a little boost. Those are two things that are kind of floating back in this market. It kind of depends a little bit on what might happen early in the week if we get these pops over those numbers. Particularly took something that would take this March corn, which I've been willing to sell into because I kind of felt like it wasn't going to end up really getting away here during the holiday season, and we'd be looking into 2022 before we had much going on. But sometimes the technicals kind of overrun some of the other activities, even if the fundamentals maybe are not exactly ready to go at this point, because there has been a lot of fund activity here kind of making the same decision I've talked about. This thing's not going to get above 590, or excuse me, 595 to $6 in March corn, or we're going to get January beans here above that magic $13. But those two are something to keep watch when we stare into next week. We'll have to see if who wins the chess match when you go into the next week's market.
All right, thank you, sir.
Always good to talk, Luis. It's all. It should be an interesting few weeks here.